All right, good afternoon, everyone. Thank you for attending CG's 45th Annual Growth Conference. I'm Brian McNamara, one of the analysts in the consumer space at CG. We are delighted to have SharkNinja here and to host CFO Patrick Reagan and James Lamb, who heads IR. So thank you very much for joining us. So Patrick, the company just reported another strong beat and raise quarter. How do you guys do it? What's the secret sauce, and maybe kind of provide a quick overview of the company and your growth pillars?
Yeah, sure. So first of all, great to be with everyone today. For those of you that are maybe less familiar with SharkNinja, really, kind of our approach is in terms of growing the business is putting the consumer at the center of everything that we do. And so, I think we aim to really out-innovate, both our competition as well as, creating compelling reasons for our consumers to spend his or her share of wallet with us. And so, what does that look like in reality? So, from our business standpoint, we compete in 37 categories, and that can range from anything is more traditional in our business. You can think of like vacuum cleaners and blenders to areas that we're getting into from more of an innovation standpoint. In that could be ice cream makers, our slushy frozen drink makers, our Ninja Luxe Cafe espresso maker. And so for us, what we're always focused on is innovating on behalf of the consumer. And so, Brian, to answer your question, it's like, well, how do we do it? We do it because we put a high priority on innovation. As our P&L is constructed, really where we're able to generate that is, it starts with us, from an investment standpoint, prioritizing our product design and development, our research and development. So product design is creating it, R&D is building it, then investing into supply chain to deliver it, and then finally, we invest in an outsized way in our media and marketing organizations to communicate the value of our products to our customer. And so a little bit of the secret sauce in terms of how we grow and how we drive the growth. And I think now we've been in the public space for about 2 years, and each year that we've been in the public space, we've had double-digit top-line growth.
So tariffs have taken up a lot of investor focus, probably a lot of sleepless nights for you guys. But we have not seen huge broad-based price increases on the shelf yet. In your view, do you expect tariffs to be a net positive or a net negative on your business longer term?
Yeah. I mean, putting the words net positive and tariff into the same sentence is not something I can get myself to actually say. But maybe, what I could do is, I'll give you a little bit more of our approach to it. And, certainly, we were anticipating, kind of a heightened amount of tariffs as the new administration came in. And, but what we weren't expecting necessarily was, what happened in early April. However, we had been preparing for the moment in terms of how we were going to react, and in some ways how we were already reacting in advance of that. And so for us, what we've really been doing is we've been attacking it, from 3 points. Number one is we look at our sourcing and manufacturing. We have deep long-term relationships with our sourcing and manufacturing partners. We started moving out of China for our US-based manufacturing about 4 years ago, 4.5, 5 years ago. And, as we started to see that there was a likelihood of, Trump 2 administration, we accelerated that. And we started accelerating that in kind of the Q2 timeframe of 2024. And so for those of you that have followed us from that point in time, you will have heard us a year ago talking about heightened investment, heightened OpEx investments as it related to, how we were investing our money to kind of help us, move U.S. production outside of China in a faster clip. And so, that is kind of number one. Staying in the sourcing and manufacturing space, other actions that we've taken is, number one, we have kind of a, what I would say a 24/7, 365 initiative that is called Gross Margin High Impact Initiative. And really what that is, we're constantly looking at how we make and produce product and where we have opportunities to do so more efficiently. And so, what does that look like? Really two main, a lot of subcategories within that, but two main that I'd like to communicate with you guys. And the first one is really in our, what we call our VAVE space, so value added, value engineering. And what that is that, we have teams, across the globe that are constantly looking at our product and where can we be more efficient in terms of how we produce and manufacture that product. How can we take cost out of the products that we produce? So that's number one, and that was obviously a heightened focus in terms of what was happening from a tariff standpoint. And the second one is, and this kind of comes in through more of consumer insights. And so you might ask yourself, well, what's consumer insights have to do with manufacturing? What we get, in terms of feedback from our consumer groups is, what do our consumers value in the product that we produce? And so, as I said earlier, we compete on innovation. And so, not all innovation though is created equally. And so we're constantly in a feedback loop with our consumers to understand the features that we put into our products. Are they actually valued by our consumers? And we go through the process of like, if it is valued, then obviously we keep it. If it's kind of like, it's nice to have, but it's not really something that drives value in the price value equation, then we'll look at taking that out, and we call that defeaturing. So it's taking a feature out of a product that the consumer doesn't really value. And so those two components were really critical for us. Brian, as you kind of hit on from a pricing standpoint, we want to be very careful and respectful of our relationship with the consumer and the sensitivity around price. And so, let me start with like what we didn't do in terms of approaching pricing as it relates to potentially mitigating or partially mitigating or offsetting tariffs. What we didn't do is sit around in a room and say we're going to take a 5% price increase or an 8% price increase across the board. What we did do is we looked at the products where we truly compete from an innovation standpoint, and looked at it on a case-by-case basis, asking ourselves, again, based on consumer data and insight, where do we have potential to take more price? Or said a different way, where did we maybe leave some pricing on the table? And so internally, what does that look like, or how do we talk about it? We talk about it in the sense of getting paid for our work. And it's really important for us as an innovation company to get paid for our work. We want to get paid for our work because we invest more in product design and development, more in R&D, more in media and marketing than any of our competitors. And so in areas where we're truly competing from an innovation standpoint, we have the opportunity to take surgical price, and that's part of what we did. And then the third pillar is just a continued efficiency of our operating spend, our investment spend, and how we spend from an OpEx side. So when you take those three pillars together, that's really how we've been approaching the challenge of tariffs.
So you guys you reached your goal of being 90% out of China by the end of Q2. You're on pace to kind of be nearly completely out by the end of this year. How has that shift been? I'm assuming it's not that easy, and you've kind of run into some unexpected things along the way.
Sure. So just a great question. To be really clear, we are out of China at the 90% rate by the end of Q2, and nearly 100% by the end of the year for our U.S. production. China is still and will remain an important area of the world for us from a sourcing and manufacturing standpoint. But from a U.S. standpoint, we're hitting that, which is what we committed to late last year. So in terms of how that's gone, it hasn't been easy. It definitely hasn't been easy. But where I think that we have hit the mark in terms of what we said we were going to do is we leaned into our sourcing and manufacturing partners that we've had. And in nearly all cases, they've been with us for a decade plus. And so, what we did is, we partnered with them starting back, 4 or 5 years ago in terms of, laying that kind of groundwork to move U.S. production outside of China. And so, where are we? From a standpoint of quality, The production that's moved into other Southeast Asia countries is on par. From a cost standpoint, it's on par. We got there because we've been able to lean into some of those partnerships and the know-how to do that. Where we are not quite at parity right now is from a throughput standpoint, and so that obviously is getting better every day. But the two most important components for us, quality and cost, we feel like we're on par and very proud of that.
Brian, maybe just one comment I would add is, as we've diversified to these other Southeast Asian countries, we've built up subcomponent and tier 2 vendors in addition to our tier 1 suppliers, so that when we can produce in Vietnam, we can source all the parts in that local area,
Right.
not be dependent on other countries for the subcomponents.
Yep.
Got it. So the company launches or targets to launch about 25 new products a year. How do you avoid the boom bust nature kind of inherent in new product launches?
Yeah, so for the group, 25 new products from the ground up each year. That's really kind of the ethos of our innovation, and also 2 categories a year. And so right now, as I mentioned earlier, we're in 37 new categories. In terms of like the boom bust, maybe I'll give you kind of a some insight from one of our larger categories. And so we'll give the air fryer example. And so from an air fryer standpoint, what we really do is we don't look to introduce a product per se. Of course, it is a product that's coming to marketplace, but our longer term view is that product becomes more of a franchise. And then that franchise gives us credibility to move into adjacent parts of the home or increasingly outside of the home in terms of what we're doing now. And so what does that look like on just kind of like an evolution basis? We kind of exist, again, from an innovation standpoint to compel the consumer to buy our products. And so in many cases, we're trying to out-innovate ourselves. And so, using the air fryer as an example, when we entered into the air fryer marketplace, we really disrupted it in a significant way. And we went in, initially through kind of single basket air fryer. For those of you who are familiar with the products, kind of know what I'm talking about. And then we heard from our consumer insights folks that, launching primarily through a U.S. lens at that point in time in our history, it's like, well, we want even a bigger air fryer basket. So the next, innovation came in more like size and to a lesser extent, cooking technology. And then the next one was like, well, even bigger. And so then it's like, okay, well, we've got, kind of like SUV style air fryers. Then we started to hear from our European consumers and consumers that are in more, urban metropolitan areas say, hey, your SUV air fryer is taking up too much space on my counter. And so that's when we actually moved to, the dual stack air fryer. So kind of like a air fryer condominium almost. And so that was, another innovation. And then we heard at the same time that, parents with kids, they want to be able to cook, their teriyaki salmon, and they want to be able to cook their, chicken nuggets at the same time. And those things don't like cohabitate well together. And so the next step in the innovation for that was like the dual basket. It's like you could cook your salmon on one side, you could cook your nuggets on the other side, and everybody's happy. So, that's, kind of how we go about trying to continue out innovating ourselves. And then the next exciting, product that's going to come in this space is just hitting the market right now, and will start to gain more critical mass in the back part of this year, is our crispy air fryer, which is completely different. It's a glass air fryer of varying sizes where you can actually physically watch whatever you're cooking, and you could cook a whole chicken in it, by the way. In the larger size, you can watch that cook. And so, to get out of like the boom bust, because we don't think of anything as just like a single product, we think of it as more of a franchise. So that's part of the thought process behind.
Really helpful. So understanding the company kind of plans for singles and doubles, not home runs with new product launches. What new product or innovation that should be material to 2025's results kind of has surprised you the most in terms of success?
There's we try not to get surprised because we do a lot of research in advance in terms of how product is going to resonate with consumers. I would say that, I mean, I'd be remiss if I just, if I didn't talk about the slushie. I mean, it's just been an incredible consumer reaction. I remember talking about, the potential of, and maybe by show of hands, when I say slushie, does anybody know what I'm talking about? Like 2 people, maybe like 5. So slushie is like, think 7-Eleven or Stop and Shop, the big, And so, about a year ago, as we were getting ready to bring this to market, we didn't necessarily know what we had. We had a lot of questions, incoming. It's just like, well, how do you know this is going to be, a hit? It's like, what does the NPD data tell you? And we're like, well, there's no NPD data on slushy categories. It just doesn't exist.
Right.
And so, but what we did do is along the way in all steps of development, from whiteboarding this to bringing it into production, is get consumer feedback. And the overwhelming consumer feedback that we did, and we do hundreds and hundreds and hundreds of consumer interactions in their homes, in our testing facilities, in our headquarters space to gauge the reaction. And we were becoming increasingly convinced that we had a hit on our hand. But even though we thought we had a hit on our hand with this, we were still aiming for just a double because as we go to market with these products, the one thing that we don't want to do is we don't want to get over inventoried in the marketplace. So we tend to take a cautious approach. But as we launched and kind of went through our initial cycles of launch, the consumer reaction was incredible. We found ourselves chasing demand in a significant way, and is just been an incredible success. But what's important is that it's not a one-hit wonder, and so the plans behind the plans of the slushie, not dissimilar from what I talked about in the air fryer space. And so it's not like a one and done sort of thing. And think about it as growing into various iterations of a franchise that'll help us, prevent this kind of boom bust concern that we get a lot of questions on from investors in terms of how we keep the growth going.
Great. So let's talk about international. The UK is your largest market there. I think you brought that in-house into a direct model, I think 2014. Mexico just shifted to a direct model as well. Like, what is the milepost you need to kind of achieve to kind of make that transition from maybe a distributor-oriented market into a direct model?
Yeah, so for the group, we really have 2 ways that we go to market in a territory. One is we can go through a distributor model, which is a little bit what I would say lighter touch for us. So we're working with the distributor, we sell to the distributor, and then the distributor just kind of blows out product to accounts. And so for us, it's kind of a low maintenance way to enter a marketplace. The owned version of marketplace is when we actually own the relationship with the retailers in market. And what we've been learning, in the last couple of years or so is, whereas we initially had concerns about our ability to own our distribution and execute in a successful way, as we've met with success in the UK, in Germany, in France, and some of the Central European countries, it's given us the confidence to kind of move more from going primarily in through a distributor model to more of really having the confidence that we're better off owning our distribution and the relationships in the marketplace. And so whereas maybe like a year ago or so, as Brian's alluding to, there probably would have been like a mark of like 100 or a couple $100 million, and we're like, okay, that's critical mass, now we want to own it. We're getting more to the point now where we feel like it's better for us to own that distribution and that relationship and that marketing and that communication with the consumer from the jump versus going in through a distributor. Now, distributors will still play an important part of our business. Where will that be? You can think of countries that may be a little bit less stable from a macro standpoint, from a geopolitical standpoint, that we still have got a large customer base, but maybe we just don't want the exposure of what may happen in 2 years or 4 years, et cetera. And so what you'll see for us is, as Brian just mentioned, we bought back our distributor in Mexico this past Q1. We did that because we feel that how we had grown with the distributor, we'd kind of gotten to like the maximum kind of contribution that they were going to give us, and that we could kind of take it over and run the business in a better way. You'll see us in Q4 of this year and Q1 of next year. We're going to convert Spain, Portugal, Italy, the Benelux countries, as well as the Nordics, into own distribution. So we're excited about it. From a P&L standpoint, we'll capture more of the revenue. We think that there's longer term, there's more revenue to be captured that way. Our product gross margins will be higher. We'll invest a little bit more OpEx, but from a net bottom line standpoint, it'll be more accretive going to market this way.
So the growth of this company's seen, since 2008, a CAGR north of 20%. You did 32% growth last year. You just guided last week to a 14% top line kind of midpoint this year. This all in a market that might grow low single digits each year. So what does a quote unquote normal growth year look like for you guys?
Well, I mean, I don't know if there's normal anymore, to be honest. I mean, what we aim for is, we've got, our approach to growth is really through, what we call our 3-pillar growth strategy. And so, it's fairly simple on the surface, but, it's complex to execute on. And what it is really, the 3 pillars of our growth strategy is growing our base business. And so as we talk to investors, the vast majority of the questions that we tend to get are around, some of our more viral products that are out in the marketplace, kind of the one-hit wonders, or what we try to avoid is one-hit wonders. And so, a lot of time is spent on that. And a lot of time in terms of what we do is spent educating the investment community that, the base part of our business, the day-to-day, vacuum cleaners, blenders, carpet extraction, hair dryers, et cetera, that is, we have a very healthy, strong base business, and we need to continue, to preserve that. And why is that important for us? It's important because it is an investment engine for us. So that strong, healthy business helps us to fuel the investment that we put into, our product design and development, our research and development, into our supply chain and into our marketing and media spend. And so first pillar, base business, exceptionally important, doesn't get a lot of play. It's the less sexy part of the business, but exceptionally important in terms of how we drive our business. The second pillar of the 3 pillars is growth in new products. Now this, tends to be the more sexy part. It's the things that, you may have heard about recently. We launched a new grill this summer called the Flex Flame. We launched our first foray into kind of med spa beauty with our Shark CryoGlow face mask that has red light, blue light, under eye cooling, which is something I've needed as we've gone through the tariff challenges. The slushy is out there, the creamy is out there, and so that's really what kind of constitutes new products. And that can also be it can be new categories, but it can also be new products in existing categories, and that is kind of like to the franchise model that we talked about earlier. And then the other component is international expansion. And so, when you think about the 3 pillars that we've got, it's the base business, it's the new product revenue that we've got, and then it's the international expansion roadmap that we're on.
So Dyson's probably your closest comp right out there. I think they last reported revenues of $9 billion in 2023. You'll be at a little north. You'll be north of 6 if you hit the midpoint of your guidance this year, $6 billion. So I'm sure Mark has a number in his head, but how big can this company get?
Mark definitely has a number in his head. Yeah, we feel like we've got a lot of white space, and so not going to pin me into a number, but if you think about the prospects in terms of where we are, and you think about how I was just talking through international growth, and I'll just give you a couple of stats, and you can kind of interpret it a little bit. We've only been in the UK in a meaningful way for about 7-8 years. We entered, and then we kind of stumbled, and then we went back in. And so we've been really getting it right in just the last 5-6 years. We've just recently gone into Germany. We've just recently gone in to France. In France and Germany, of the 37 categories of products that we've got, we're in roughly, 10?
Yeah.
10 categories. So, I'll let you do the math on that from a white space perspective. All those other countries that I named earlier that we're converting, from distributor to own business, de minimis in terms of revenue at this point in time as it relates to our P&L. And so then if that's one leg, and then I've talked about how important and the focus on preserving and growing the base, and then the next leg is from a new product standpoint, a new category standpoint. Again, we stand by the new 2 categories per year. And for those of you that are familiar with some of our investor materials, our investor presentation, which you can get on our investor website, one of my favorite depictions of where we are is it's kind of a diagram of the home, and everywhere where we are, and maybe importantly where we are not in the home space. And so what we're trying to do, and as I talked earlier at the top of the discussion, how important it is for us to put the consumer first, solve problems on the behalf of the consumer, and really put the consumer at the center of everything we do from an innovation standpoint. When we do that right, it gives us the license to travel to different parts of his or her home. And so if you think about SharkNinja, from its kind of nascent space of where we were 10, 12, 15 years ago, is primarily a vacuum cleaner business and a blender business. And as you look at how we've built those 2 distinct brands, Shark and Ninja, and where it's allowed us to travel, both in the kitchen, outside of the kitchen, into the living room, into the bathroom, from like a hair dryer, hair straightener standpoint, then additional license, by getting into hair, how that's allowed us go deeper into beauty, into the med spa space with the CryoGlow. And we've got a product that just launched yesterday in beauty, and another one that's launching later on this year in beauty that we're really excited about. And so you kind of build that adjacency, where by building credibility with the consumer, then you can go to the next thing and then the next thing. And so that's where we and I and all of us are really excited about is we still feel like there's a lot of white space in terms of the home and problems that the consumer has, and in some cases problem that the consumer doesn't even know that he or she has at this point in time that we can get behind.
Last question quickly, since we're out of time, but we're asking this question of all of our consumer companies. How healthy is the consumer from your vantage point today versus a year ago? And how do you see consumer spending shaping up in the back half of this year and as we enter 2026?
Yeah, I mean, listen, it's obviously goes without saying, it's something that we watch, and are very concerned about. What I would say is, for us, we don't compete at the low end of the market in our industry and in our categories, and we don't compete at the very high end. And so, we're competing on innovation, we're competing on price value, and so for us, we haven't seen, and this is just a very SharkNinja specific. We have not seen at this point, slowdown in consumer spending with us. Very aware of the fact over the last couple of weeks, we've seen, some remarks at, the lower end of price point that there's, seeming to be some slowdown in that space. So we're very aware of that. We don't compete there, but, that these things can, tend to work their way through. But for us, what we're focused on is, the consumer and creating that value for the consumer. Because what we know is, as you go back over the last 20, 30 years and you look at Great Recession or you look at dot-com bust and, all the other tremors that have been in the markets, the companies that win in the consumer space are the ones that are innovating on behalf of the consumer. The ones that are, competing more on price, tend to be the ones that don't win in kind of down cycles. And so, whether, we're up or whether we're down or whether we're just kind of steady Eddie in the middle from an, economy standpoint, I feel like we're positioned well.
Great. We're out of time, but thank you so much for joining us. Appreciate it.
Great.
Thanks, Brian.